Being liquid and solvent do not automatically mean that a company is profitable. Each aspect is made of different components and thus requires different analysis. A pleasant afternoon to everyone. Presented in the screen is the analysis of Statement of Comprehensive Income for Century Pacific Food Incorporated CPFI for the years 2021 and 2022. This statement shows the company's financial performance, profitability, and overall success over the course of 2 years. It also helps us understand the impact of other comprehensive income items on the company's financial position and future prospects. Let's look at the net income analysis. Net income is the company's profit after deducting all expenses from revenue. As you can see from the table, CPFI reported a net income of 4.67 billion pesos for the year 2021. This increased to 4.9 billion pesos for the year 2022. This shows an increasing trend in net income, which indicates improved profitability over the years. Moreover, the company's other comprehensive income accounts increased highly in 2022. As presented, the remeasurement gain increased by 200% and the currency translation adjustment increased by 7,945%. These increases in the non-operating and non-cash items favorably affects the overall financial position of the company. All of these resulted in the 9.3 increase in the total comprehensive income of Century Pacific Food Incorporated.
Based on the income statement, we compute for the measurement of profitability. As you can see from the table, the gross profit margin of for CPFI in 2022 was approximately 28%, slightly lower than the margin of 23.3% in 2021. This means that for every 100 pesos of revenue, the company earned 23 pesos of gross profit in 2022 compared to 23.3 pesos in 2021. This indicates that the company returned less profit from its sales in 2022 compared to 2021. This decrease in profitability could be attributed to various factors such as increase of cost of goods sold. This suggests that the company must monitor its expenses specifically under the COGS to maintain or higher its profitability.
Next is the operating profit margin. For CPFI in 2022 is approximately 9.3% lower than the margin of 10.2% in 2021. A decrease in operating profit margin indicates that the company's profitability from operations decreased in 2022 compared to 2021. This decline could be due to higher operating expenses relative to company's freight and handling. A lower operating profit margin suggests that CPFI's operational efficiency may have decreased or operating costs may have increased in 2022. Moving on, the net profit margin for CPFI in 2022 is approximately 8% lower than the margin of 8.5% in 2021. A decrease in net profit margin indicates that the company's profitability after all expenses, including financing costs, decreased in 2022 compared to 2021. This decline could be due to higher financing costs.
As for the return on assets for the company in 2022 is approximately 11.2% higher than the ROA of 10.5% in 2021. An increase in ROA indicates that the company's ability to generate profit from its average total assets improved in 2022 compared to 2021. This improvement could be due to higher net income relative to total assets or better asset utilization. A higher return on assets suggests that the company's profitability in relation to its asset base improved in 2022. Moving on to the return on equity for the company in 2022 is approximately 18.6%, which is higher than the ROE of 17.4% in 2021. This increase in ROE indicates that the company's ability to generate profit from its equity improved in 2022 compared to 2021. This improvement could be attributed to higher net income relative to total equity or an increased efficiency in utilizing equity. A higher return on equity suggests that the company's profitability in relation to equity increased in 2022.
Century Pacific Food Incorporated is profitable company. The company's income statement ratios show that the company's profitability per peso of revenue decreased slightly from 2021 to 2022. However, its profitability per peso of asset and equity increased. This suggests that the company was able to improve its asset and equity efficiency, but faced some challenges in maintaining its gross and operating margins.
For the recommendation, since the cost of goods sold had a higher increase of 14.1% compared to the 13.8% increase in the revenue account, CPFI could reduce its cost of goods sold to improve profit margin. Also, monitor operating expense to control gross profit margin, operating profit margin, and net profit margin.